Hello, welcome to the weekly technical analysis review for Monday, September 24th. I'm Rafi Bayajian, currency analyst at XM.com. The pairs we're going to be looking at for this week are the pound dollar, the euro yen, and the Kiwi dollar. Starting first with pound dollar, we can see prices have fallen sharply from that 2 months high just below the 1.33 level we saw last week. There is some upside momentum today though, with immediate support coming from the 1.3065 area, which is the 23.6% Fibonacci retracement of the downleg from 1.4376 to 1.2661. However, if we have a look at the stochastic oscillator, we can see both the percentage K and the percentage D lines are pointing downwards, suggesting there's still some persisting downside pressure. If we do see a break below the 1.3065 level, we could then see the pair heading towards the 50-day moving average at around 1.2980. A break below the 50-day moving average would risk shifting the near-term bias back to a more bearish one, and then we could see the 1.28 handle coming back into range. If prices were to drop below the 1.28 level, it would risk driving to the pair below that 14 months low 1.2661 we saw back in mid-August, and that would signal a resumption of the medium-term downtrend. However, if we have a look at the MACD, we can see it's pointing to bullish momentum in the short to medium term. The histogram has eased only marginally since last week's peak, and it's holding above the red signal line. So if we do see a strengthening of today's upside momentum, the pair could once again challenge the 1.33 handle. Just above that, we have the 38.2% Fibonacci at 1.3316. And then we have the 50% Fibonacci after that at 1.3518, which is also where the 200-day moving average has currently a flat line. If we were to see a break above the 50% Fibonacci, that would signal a shift to a bullish outlook in the medium term. So let's now turn to euro-yen pair. We can see that the near-term bias is fairly bullish. RSI is holding just below the 70 overbought level. Prices on Friday spiked above the 61.8% Fibonacci retracement of the downleg from 137.49 to 124.61. If we do see another attempt up to the upside, we could see the pair challenging the April peak of 133.48. A break above that peak could signal the start of a new uptrend, and then the next major resistance after that would come at the 78.6% Fibonacci at 134.73. However, if we do see a downside reversal, which is possible given that the RSI is close to reaching overbought levels, we could see the pair heading back down towards the 50% Fibonacci, which is just above the 131 handle, is also where the 200-day moving average is flatlining right now. A breach of that support area would drive the pair towards the 20-day moving average, and that's also just at where the descending trend line currently is. So key support area there at around the 130 level. Drop below the 130 level, we could then see prices heading towards the 38.2% Fibonacci at 129.53, and just below that we have the 50-day moving average. So if euro-yen was unable to hold above the 50-day moving average and moved south to that important moving average, we could then see the focus shifting back to the downside. We could see another sharp sell-off towards the bottom of that medium-term neutral range, which is around 124.60. So 124.61 was in fact that near one-year low we saw back at the end of May. A breach of that low could signal a return to that return to downtrend. In the medium term, though, the neutral picture is still holding until we see a break either side of that neutral range. Finally, let's move to the Kiwi dollar pair, another pair that's looking fairly bullish in the short term. If we have a look at the stochastics, the percentage, the K line is in the process of forming a bearish crossover with the percentage D line, so we could potentially see a downside reversal in the near term. However, for the time being, support at the 23.6% Fibonacci of the up leg from 0.65 to 0.6698 is holding. That's around 0.6651. A drop below that could then see the 50% Fibonacci coming into range. That's just at the 0.66 handle and where the 20-day moving average is converging at the moment. Below that, we have the 61.8% Fibonacci at 0.6575. A drop below that level, we could see the Kiwi dollar pair heading back towards that 2.5-year low of 0.65 from early September. Below that low, we have the 161.8% Fibonacci extension at 0.6377 as another major support to watch out for. But given the past week's gains, that the medium-term downtrend has weakened a little bit. We saw prices breaking above the 50-day moving average for the first time since April. Immediate resistance is coming from the 0.67 level, not too far above that. 0.6726 is the August top, so that's another major resistance. And then further up, we've got the July top of 0.6849. Break above the July top could then strengthen the upside momentum even further, driving prices towards the June top of 0.7058. If we were to see a break above 0.7058, that could potentially signal the start of a new uptrend for the Kiwi dollar pair, and we could see the formation of a bullish structure in the medium term. That's it from me. Thank you very much for watching and have a great day.